Good afternoon, ladies and gentlemen. Welcome to the 2023-24 Tanzania Budget Insights webinar by KPMG. My name is Cecilia Otaru. I'm a tax manager at KPMG. Together with my colleague, Jennifer Kajuna, we'll be your moderators for this session. I should tell you that I, together with the rest of the team at KPMG, are delighted to have you with us this afternoon. And we have prepared for you an economic analysis and overview of the budget. We'll also be bringing to you the proposed tax changes in Tanzania and across the region. And we also have a panel discussion with a set of seasoned panelists who will be bringing us into their minds of what they think is the changes going to impact the economy. And right after that, we are going to also have a question and answer session where we'll be addressing all your questions. So right now, I will urge everyone who has a burning question as the presentations are going on, kindly put the question on the chat and we will get to it at the question and answer session. So without eating any more of our time, I would like to welcome Alex Njombe, who is our country managing partner, for the opening remarks. Alex, you have 3 minutes. The floor is yours.
Thank you very much, Stacey, for the welcome note for me. I think a really exciting time for us at KPMG. And having this session every year, it's really delighting to kind of have a conversation on what we are seeing coming through from the budget process. Having heard the Minister, Honorable Minister Mwigulu Nchemba yesterday, delivering the budget speech for the year 2023-2024, really was excited with some of the things that were coming through. And some of the things that we wanted to see in the past coming through from the proposals, from physical side of things, especially on taxes, things that we're happy to see that they've been able to be brought forward, but also equally so, some of the opportunities that we believe are very critical for us is business fraternity, things that we would wish to have been taken on board, but unfortunately for this particular budget, they didn't come through. And we are really delighted to just tell you that we were also involved as KPMG as part of the budgetary process in terms of submitting our proposals for consideration by the ministry. We had a chance, and especially myself at some point, to sit and advising the ministry in terms of some of the proposals that were coming through a think tank that was constituted by the minister. And some of the things that came through that from our side of things in terms of some of those proposals are really exciting, and we're happy those have been taken on board. And as I said, some of the opportunities that we would wish to be taken, we'll see how those can still be cascaded for consideration in the future. Really just to mention a few of proposals that we had put across as KPMG that have been taken on board. The famous Section 56 from the Income Tax Act perspective, in terms of some of the considerations, especially when you do an indirect disposal of shares, or even to transactions which are really concerned with the allotment of shares as well. And if then the underlying change of control happens for those particular instances, really just to make sure that then now the transactions that are happening within the tax jurisdiction within Tanzania are not impacted by the provision of that section. I think it has been a cry in the business fraternity for some time, and I think it's a step in the right direction by starting with the local transactions first, and probably, hopefully in the future, it can open an avenue for more discussion in that area. I think there was also a proposal on increasing the threshold for VAT purposes for the traders and business people who would be included in the VAT band from 100 million to 200 million. We had seen or probably requested to see that probably going still upward to the region of 500 million or so, but I think raising it to 200 is also a step towards the right direction to ensure that then the band doesn't catch everybody and it brings that burden to small traders that are probably not supposed to be included in that particular area. But also the question of tax ombudsman, that we had seen the operationalization of that coming through in terms of actually implementing, really seeing whether that then can bring the benefits that are expected in terms of really trying to handle tax complaints from the tax fraternity regarding the maladministration of taxes in the country. So that revenue is now going to be operationalized and will be accessible by the taxpayers. I think from business standpoint as well, the Skills and Development Levy that was constituted by the VETA Act. And in this particular case, we are seeing a change in terms of reduction from the percentage that is to be applied from 4% to 3.5%. I'm seeing a longer term view of probably bringing that down, but I think the decision that our government has taken is probably to take a step approach, bringing a few a point, a deduction that can eventually get it to the region of 3% or 2% in the future. We are also seeing a lot of other opportunities, including the VAT deferment eligibility on local manufactured capital goods. It's one of the areas that we had proposed for the government to take on board. We're also seeing other areas in terms of now the carbon emission area in a work of actually dealing with ESG requirements, which are critical for most of the economies at the moment. This is an area that has been looked at, and we are seeing some withholding tax coming through that will probably need to be looked into in terms of the impact of that, in terms of ESG aspects that we're supposed to be looking at as a country. Some of the opportunities that we believe has been missed in this particular budget, probably for consideration in the future, there's been a cry in terms of whether the reasonable steps taken question in terms of the loan write-off for those to be eligible for deductibility from income tax perspective. We believe there's an opportunity there to bring that clarity and make it closer to the requirement of the International Financial Reporting Standards when dealing with their own write-offs. But also we are seeing an opportunity missed in terms of lack of clarity from controlled foreign corporations or CFC provisions, deeming provisions of residence entities with non-resident owners as well. In terms of also the cry that has been there in the business community around admission of the objections, there has been some clarity in that side, but then now in terms of the decision on whether those objections are deemed to be determined, and really putting a timeline that can help to bring some certainty in terms of conclusion on those matters. And we believe this is an area that might need to be looked into in the future as well. There's no revision that we are seeing coming through on tax refunds procedures in the country. Proposal to avert delays in approving the requested tax refunds as well is something that might need to probably come through in the future, and it's an area that we had proposed that it's looked into in this particular budget. And the last one that I wanted to cover for today is really the amendment that we were seeking to see coming through for capitalization provisions, especially the interpretation of the equity-only consideration being the paid-up shares of paid-up share capital only, and ignoring things like other reserves that might, or probably retained earnings that might have been built by the business over time, which in a normal definition of equity would probably see those being incorporated as well. I don't want to take the entire session from this introductory remark, but just a few couple of items that you might appreciate as the team will be talking through, especially Professor, who is going to be taking us through some of the economic highlights today, is really appreciation that we are seeing a projected or expected growth of our GDP with an average of 5.2 for the year 2023. We'll remain to see how that data will be actualizing, and we are coming from an history of about 4.9 that we saw for 2021 and about 4.7 that we saw in 2022. We are also seeing some growth being contemplated, and we are looking at the flagship projects that we have in the country that based on the approach that has been taken and the promise from our president, Madam Samia, that this project will still go through and will continue to be funded by the government, which is really good news. And some of the anchors of the growth that we are seeing has been on those projects as well. I know, and I can't really finish without saying this, that dollar or hard currency has been a big issue at the moment in the country. And we have seen a statement from BOT at some point about it. And one of the panelists will just talk us through some of these aspects as well that we are seeing from the business community side of things, and really to just be able to appreciate that this is something that is coming through, that we are all seeing in the business community. Happy that inflation is still in check in terms of the target of 5%, that we have not exceeded that. So kudos there to the government, and really just to see that the right things, the right approaches still be taken. And we are hoping with this budget, we will see a continuation of that inflation being contained to the levels that are being projected. Really happy to see the increase in terms of the budget total that has been proposed of 44.4 trillion that we are expecting for the year 2023-2024. We remain to see how that is going to be performing, considering the performance of the budget not being on par for the year that we are finishing for 2022-2023, but really just to also see how the funding modality is proposed in terms of how we're going to be able to fund that budget. Those are some of the things that we'll be watching from the business community perspective, and see how that then might impact some of our business. From sector perspective, we are happy mining taking a big role, or pivotal role in terms of the forex attraction for the country. The same for tourism sector, but really it's for us to just to see how we can do it and how we can support the growth that we are seeing in the country from where we are in the businesses that we are leading. And really just to welcome you all in this particular webinar, and to thank you for setting time to be with us, to hear the experts and get the questions from you, so that then we have a conversation in this session today, so that that can then be really a foundation of how we can proceed in the execution of this budget that was read by the minister yesterday. Just to take it back to you, Ceci, for the next presenter to come in. Thank you very much.
Thank you so much, Alex. That was such insightful remarks. And we would have next our economic analysis being brought up by Professor Semboja Hadi Hatibu. He is an associate professor at the Zanzibar University and senior policy research fellow with the Department of Economics at the University of Dar es Salaam. Formerly, he has worked as a director of research with the Economic and Social Research Foundation in Dar es Salaam. He holds a PhD in economics from the University of Gothenburg, Sweden. He has over 30 years of experience in socio-economic modeling, policy evaluation, processes, analysis, and formulation of various strategies. Currently, the professor is the commissioner in the Zanzibar Planning Commission at the Ministry of Finance and Planning. He is also board director in the Office of the Chief Government Statistician in Zanzibar. I mean, the list could go on. Professor, we are so privileged to have you this afternoon as you'll be taking us through the economic analysis. And please, the floor is yours.
Thanks very much. I think I will start where our colleague introduced us to the discussion. What I would argue is that the current government regime continues to implement more or less the same kind of policy strategies adopted in the previous regimes, take into account that the way we look at our economy. Clearly, Tanzania economy is an open, it's a small economy, and it is still part, and it is integrated with the global world. Saying that, what I mean is that at least when you look at the budget, the foundation for it, not only that is based on domestic policies and politics, but also it tries to integrate and adopt these what we can call global or regional philosophies and measures which take us through our economy. So we are part and parcel of the world, and we will continue to be open, and we will continue to work with others in terms of developing the Tanzania economy, because Tanzania economy is part of the global economy. If you look at the economy at the moment, you'll find that during the last 10 to 15 years, the economy of Tanzania has been switching clearly with the increasing participation of private sector as a productive sector, and in all these socio-economic sectors. But looking at the economies, the GDP contribution of the economy, we will notice that during these 10 years, there has been a decreasing importance of the GDP contribution from the agriculture sector, but as well as increasing importance of the servicing sector. I can say that the manufacturing sector has not doing that good in terms of its growth, because almost the statistics are the same for the last 50 years, that the growth rate of the manufacturing sector has remained 9%, and the GDP contribution of the mining sector of the industrial sector has also been 9%. It is the building construction sector which is strong, and at the moment it is contributing to about 10% of the total GDP. Now, the Tanzanian local economy is dominated by the servicing sector, and then what we note is the dominance of the informal micro and small sector participants in this economy. The economy as it is, from the participation of the economy from the government is very clear that our government depends on the contribution from the domestic revenue, as well as from the foreign revenues. The Tanzania's economy and the sources of finances depend very much on the tax revenue rather than non-tax revenues. So that's something that we can discuss about the nature of the economy, precisely considering that Tanzania economy is a resource and mineral resource economy. One would have expected it that at least the non-tax revenue from these firms which are corporate owned by the government should also contribute to a significant contribution to the total revenue. So the current revenue which is coming from the Tanzania revenue, it is to the tune of at least, given the current budget, which is expected to the tune of 41 trillion. It's about 23 trillion, which will be coming from the Tanzania Revenue Authority, and from the non-tax revenues about 3.3%, and still our government will finance its deficit using the grants and the concessional loans to the tune of 4.67 trillion, and now we have switched very much depending on the domestic borrowing to the tune of 5.78%, 5.78 trillion Tanzania shillings. Now, what I would say is that if you look at the sources of government financing from the three major domestic departments, namely the domestic revenue, the custom and excise, and the large taxpayers, at the moment, what would you say that still you have about 80% of the revenues which are generated and collected by the government contributed from the private sector firms. One source, about 40%, is coming from the customs and exercises, which we say these are the firms which are producing in other countries, and by the fact these goods have to be imported and enter into the Tanzanian, it means that the government has to collect revenues through different types of the taxes, including levies and other and penalties. This they come to the tune about at the moment has reached to about 39%, which comes only from this source. So you have two very important large taxpayers contribute to about 40%, and the custom exercise contribute about 40%. So the domestic revenue, basically, it's about to the tune of 20%. Now, one would say that 20% is too small, but it is clearly that this is a function of the domestic type of economic activities. And the majority of the Tanzanians, many they have still some problems of exactly not related to the inefficient taxation system, but we can say that these Tanzanians are not taxable because of the level of the poverty, but as well as because of that they are not good taxpayers. And I think something we have to discuss is that truly we have some weaknesses in the domestic revenue tax systems in terms of the policies, in terms of the laws, in terms of the regulation, and in terms of administration. Now, let me switch a little bit to the discussion of the Tanzanian expenditure performance for the last 3 years. Now, our budget, the way it is the way we spend our money. We have two forms. One is recurrent, and another one is development. Now, in terms of the recurrent, we have the wages and salaries, and another one is other charges. At the moment, if you look at our budget, greater percent is used in recurrent, and a little bit it's used in development. When I say little bit, I mean it's in relative terms. At the moment, we are using about 11 trillion Tanzanian shillings for the development purposes. Now, some of this, which is from the accounts, it suggests that out of this which we're using for development, it's coming from the domestic resources, and as well as which is about 6.24 trillion Tanzanian shillings, which is coming from the development from domestic resources, and about 1 trillion is coming from the external resources. Now, this is something that we have to look at it from two perspectives. One is the fact that at least we can say that for the last 3, 4, 5 years, our government has been busy putting some investment in these public infrastructure facilities, especially in the communication infrastructure, communications, energy, and road and transport in particular. Now, something very important for the government expenditure is about debt. Now, debt sustainability have been very crucial, and I'll talk about this one first of all, discussing about what the government is suggesting about the debt sustainability and at the moment. Now, looking at for the data which is given by the government for the last 3 years, including this year, there is a good sign that the debt is what is coming is the present value of the public debt to the GDP, and the present value of the external debt to the GDP, and the present value of the external debt to the exports. All these statistics point out to the direction that our debt is sustainable, and and Tanzania has the capacity to continue both borrowing domestically as well as externally. But I think these arguments are very clear by the fact that we don't mean that we are not facing problems, rather than we have to participate as part of the global citizens, that we have borrowed, we have taken money from outside, and we have used these funds for our development internally, and now we have to realize the importance of making sure that we pay both the principles and the interest which are associated with the money which we have invested in our country. Now, let me look at the budget themes for Tanzania for the last 3 years. Now, one is the fact that Tanzania is in East Africa, and being in East Africa, we work together on many aspects. We come to agree about the nature of our economies, and therefore we all like to have a common ground. We are the common ground, and we have to think about what is our current situation and what is our future, take into account the intensification of the integration of these, let's say now, six economies in our countries, because now we have Tanzania, Kenya, Uganda, Burundi, Rwanda, South Sudan, and DRC now they are in this region. Now, all these countries have agreed on the common agenda that we need to accelerate economic recovery, take into account the climate change adaptability, mitigation, and the enhancing productive sectors for improved livelihood. So we believe that as long as we want to work together, as long as we want to continue as neighbors, as long as we have to work regionally as one with the common goals. Now, based on these ones, so it means all these economies in our countries, we have looking forward to see that we move together. But something very interesting, which I have to emphasize about, in particular about Tanzania, it's a fact that given our constitution and given our current laws, despite of the fact that we know we have these policies which are very common and accepted by everybody, we still have the head of state who is the president. Now we have to understand what she thinks and what the current government regime is thinking. Now the current regime is thinking about to continue and to make sure that we complete all those flagship projects which already been identified during the fifth government regime. So I mean, so it means that we are a little bit stable, we are a little bit dynamic in the sense of placing the resources where we have to continue, because this is what our government has decided. I mean, when you're talking about development, there are many ways of developing and transforming the economy. You can either think about putting more money into socio-economic sectors, education, health, and others, or you may think of putting the more money in the infrastructure, or a combination of that. But the budget as it is, and the allocations, and the emphasis from different perspectives of the government is that we have to continue investing in infrastructure, and infrastructure seems to be very, very important for the sustainable development of the economy. We were arguing about inefficiencies in the communication. We were arguing about inefficiency in the transportation. We were arguing inefficiency in the movement of the goods and services from the rural to urban areas, ferrying our goods and services to the markets. Now, the government has taken into account and understood that the linkages of the development of the agriculture sector and the industrial sector. And we are now pushing to see that we continue with these priority areas and make sure that all the flagship projects are completed as part of the plan. At the moment, obvious, we know there is a burden. On one hand, you have to make a choice between the current consumption and the investment in the socio-economic sectors like education and health, and at the same time also continue with the bigger projects like railway infrastructure, the SGR, or the Julius Nyerere hydropower, or the improvement of a Tanzania company limited, and the other projects which already we have started. Now, given whatever we are doing in terms of the investment, one could note that, as already introduced, that the real growth of real GDP growth of our economy is to the tune of 5. It's something above 5, and the inflation rate are within 3% and 7%. That is at least they're below the double digit. And the domestic revenue collection is to the tune of 14.9%. And if you look at the percentage of tax collection as percentage of the GDP is to the tune of 12%. Now, these statistics indicate that that Tanzania is still implementing what we can call those structural adjustment programs, which started during 1985-86, going to 1995-96 as the first socio-economic reform programs, and the second one from 1995-96 to currently. So we have the same targets in terms of macroeconomic policy targets. And this is according to the agreements with the Bretton Woods institutions that at least we have to make sure that we can maintain foreign exchange, foreign reserve sufficiency to cover at least minimum for 4 months. We have to make sure that the inflation is to the single digit, and in a way, much as it is that on one hand we have to keep track and ensure that we are an economy which is stable in terms of the macroeconomic stability, but at the same time we have to look at unemployment, especially youth unemployment, because the youth unemployment has a little bit increased. The rate of youth unemployment has increased from 12.2%, I think, to about 12.4%. So in a way, unemployment has remained a problem to Tanzania, to many Tanzania, especially the youth Tanzanians. Now, if you look at the Tanzanian policy, fiscal policy strategies which have been pursued during the last 3 or 4 years, one would say that we have been very stable in the sense that trying to find all these policies which, first of all, with a clear understanding about the importance of the private sector. So in terms of the targeting, in terms of the policy goals, the government is looking to promote and support the development of the private sector. In terms of the support, the government is trying to see that the business environment has to be improved. So if you read the budgets for the last 3 years, these are the typical strategies which have adopted. Plus the fact that we know that the global economy is digitalizing. So the Tanzanian economy is also digitalizing. So in a way, there has been a focus on the strengthening the use of the ICT systems in many government systems, including the tax administration. So the digitalization, it's something that the government, not only the payment systems, discussing about how the different the government systems should be integrated to increase efficiency, as well as to ensure that you have the appropriate dividends and contributions which are done timely and effectively for all economic participants in the economy. So the Tanzanian electronic payment system is in place, is functional, and it has been there, and there are efforts, of course, to ensure that you are using local indigenous knowledges to improve these services, because they're very relevant to improve the taxation system. They are very relevant to improve the socio-economic systems, which include not health, but also education and areas which for our interest is to the linkages between the taxation systems and within the financial systems. We mean the procurement systems, the auditing systems, the accounting systems. All these ones need to be integrated to ensure that we have something digital economy in function, and which has to have an effect to the Tanzanians and in the life of the Tanzanians. Now, if you look at this year's budget, the minister was very much aware of the existence, what he called rampant corruption practices in tax collection, especially in the large, this is what according to him, he's saying in the large taxpayers where the government revenues tend to go into private pockets. On one hand, I tend to understand him, but I would say that we have to correct ourselves because there is a difference between corruption and theft. And I'm not sure whether this is an issue which should be targeted to the large taxpayers, especially when you have the statistics which says that more than 40%, which it is coming from the large taxpayer and the formal operating companies. So I would tend to look at those areas where you have minimum tax collection, especially in the domestic revenue sources. So you have something which I can look at it and advise the government and advise everybody to talk instead of having this kind of a serious accusation which is coming and pointing to the large taxpayers. I would say no. Let's discuss about the issues related to tax evasions, tax avoidance, and theft. In my own thinking, I think that the issues are related to tax corruption, which is linked to the weak taxation system. Now, when we talk about the weak taxation system, I think the minister admitted and acknowledged the idea of saying, one, the budget system are illegal, and secondly, there are processes which have to be going through the system, and to ensure that one of the issues is related to the processes of taking these pieces of legislation to the parliament, which also change the behavior of the taxes. And then now the problem is which we know is not to do with the laws which are passed by the parliament, but the regulations which later Tanzania Revenue Authority in collaboration with the Ministry of Finance, they have to work out on these ones and then come out. Now, if you understand the previous cases or the cases of the Kariakor, it has to do with the fact that not on the laws, because these things were very clear, passed through the proper procedures, but these things were associated to the regulations which came based on the studies and the way TRA worked with the Ministry of Finance. They did not involve the target people, the stakeholders, and consequently that one comes out to the fact that the government itself is responsible and having a failure to conduct what we can call regulatory impact assessment for these tax elements which they introduced, which they knew for sure that they were sensitive. So I would look at those issues from those perspectives, but I would again like to look at on the other side, the expenditure policies. Now, the government has had many ways of trying to minimize any leakages within the expenditure area, but at the same time to optimize the uses of the meager resources which they collected. So they wanted to have a clear control on many issues. For example, last year, I think directly they pointed out to the issue of control on the uses of public vehicles, considering the type and the statutory benefits. But the current budget, unfortunately, this matter has not been well explained or monitored and to see the effect of it. Rather than what we can see is that we have the targets. Definitely, we have the target. The target for the budget expenditures is to ensure that the budget deficit does not exceed 3% of the GDP, which is in line of the East African Community macroeconomic convergence criteria. The government this year has introduced 2 or 3 things which we have to look at it. One, obvious, they know there are some problems within the government which are related to the public procurement. So they are trying to strategize and to ensure that the public procurement is well. You have the system itself well improved to ensure there is a minimum investment of the government public funds. Now, I think the last point I want to contribute here is about the budget and the way it has been allocated by the by the main sectors of economic development. Now, we have the budget this year, and comparing to the last year's budget, what we note is that of the total 100% of the money which has been allocated with respect to these sectors, education, the sector which takes a lot of government resources, it is very, very unfortunate, but this is a fact for the developing countries, is the general public services. This is about to the tune of more than a quarter of it, or 25% of the money which is allocated for the expenditure goes to general public services. Again, something very interesting is to have an interpretation of these statistics of the debt services. Now, if you look at the debt services, it's about 15% of the resources which are supposed to be allocated, they go to the principal repayment of these services. Now, and I would say that I think we all agree that it is the target of the government to support the development of the private sector. Now, there is a good link between the private sector and the economic development sectors. Now, economic development sectors in the economy, the Tanzanian economy, we include sectors like agriculture, we include manufacturing, we include tourism, we include mining, all these sectors. So what is allocated to those sectors? I can say that with my good understanding about the nature of the budgets in many of the developing countries, I would say it's about the 20%. Now, we have to accept it because this 20% include the investment which is done in the infrastructure. Now, the defense and the security and the police and everybody is about to the 10%. Now, let me come back to the question of the general public services, which include the parliament and the judiciary. They consume to about this 25%. Now, as we talk today, many people believe that there is a need to restructure our policies, especially the expenditure policies, and to put more emphasis on the infrastructure for the next 3, 4, 5 years, but also to go back to the core social economic infrastructures, which include education and health, because education takes about 13% and health takes about 5.5%. But I would say that we have to be careful when you're reading these numbers for the health, because health is the only sector which gets a lot of money from the external sources without necessarily being included into the Tanzanian budget. So we have to be careful about these numbers at the moment. Let me say that to conclude my presentation is that one, the economy of Tanzania is stable. In terms of the macroeconomic indicators, we have a positive rate of economic growth. We have low inflation rate. We have controllable government budget. We have at least acceptable balance of payment, and we have a situation, but we still have a situation of high employment rate for the young population. We can say that the private sector is the leading and productive sector of the economy, and this one has to be supported by the public But if you look at the data, you see that the public corporate entities are not efficient. At the moment, most of these public corporate companies, they operate like they are not operating as corporate entities. They're operating just like the government departments. So they don't have the single type of the objectives of making profits, rather than they have these multiple objectives. And that's the reason why you find that they don't care, or the targets of generating revenues comes just like a second, rather, but the first one is just to fulfill government policies, which at times they are not necessarily linked to the development of the country. So we have thank God and thank for this government. We still have a significant improvement and the continued investment into the economic infrastructure, which include the road transport and the energy. Which these are immediate investment, but we cannot realize the benefits at the moment. We have to wait, but this is conditional to the question of understanding how Tanzanians should be prepared to service and to maintain these infrastructures. Because, I mean, it's not simply putting the SGR in place without necessarily knowing how the SGR they are linked. But also, it's very important when you're talking about standard gauge railway system. It's not an issue of modernization, but rather than it's an issue when we're saying standard gauge railway system, it is something that has to be linked to the Africa or regional transportation system, which means unless the SGR means connecting Tanzania and Rwanda, connecting Tanzania and DRC, connecting Tanzania and Rwanda and Uganda and Kenya, that will make it known to be SGR. But at the moment, it's simply modernization without necessarily making it regional. Now, another thing very important, which I have to say, is the fact that something now, it's very, very unfortunate Tanzania is not industrializing. The GDP contribution from the manufacturing sector is still very low. And I would say that for those who believe that the mining is doing fine, that's fine in terms of the data which we get it from the exports, the cigar and the data which you get it from the taxes. But if you look at the data from the National Bureau of Statistics, especially the GDP at constant prices, the contribution of the mining is still at 4.8%, and it is not 10% as it is believed by the government, because the government tends to, I think, over-exaggerate, because they are studying the figures from the current account. Now, if you look at the GDP contribution using the current prices, that makes it 10% or 9%. But if you look at the GDP from the constant year 2015, the GDP contribution of the mining is still low at around 4.8%. And in this, what we say, and if you look at the proposals which the current government is making, is the need to protect the domestic manufacturing process, and the need to understand the genesis on how we should develop it. I think the government should continue with the policy processes which they are doing, because you can't believe it, but Tanzania, our policies, the manufacturing policies, industrial policies, investment policies are too old, because they are 1996 policies. Let me end there by saying thank you, and hopefully that will react to the questions which have been posed.
Thank you very much, Professor. That was quite a deep dive into the economy. You have brought to us what has been the trend over the years and what we can look to see in the near future. I would like to remind us that we have a Q&A chat. If you have any questions, please put them at the chat. We'll be getting to that while we do the questions and answers session. So to blend in the economic analysis, we are going to have now the proposed tax changes. And for that, we have Samuel Esupu, who is an associate director in tax. He has over a decade of experience in tax laws and regulations. He has a track record of being solution-oriented to pressing tax challenges. He has supported a range of diverse clients in implementation of the guiding tax laws. And also he provides impact analysis of the changes in the tax laws over the years. Samuel, the floor is yours. Please let us know what we should expect in the coming future in the tax environment.
Thank you, Cecilia, for that introduction. And thank you, Professor, for that detailed analysis of the budget and the economic analysis for the upcoming year. So I'll be taking you through the audience through the tax changes, the proposed tax changes that the ministers proposed. And I'll be categorizing these depending on the tax types as read. We'll just briefly capture very few but very important tax changes that we do believe might be affecting your business one way or the other. And we definitely summarize and share a detailed summary of all the other relevant tax changes in due time. To kickstart us with, I'll just try to explain in terms of the proposed tax changes, and I'll start with income tax. From an income tax perspective, the minister has proposed a number of changes, and I'll be taking you through those that are very specific, that are important to your business. The very first change that we have seen the minister has introduced is that he has introduced exemptions on internal restructuring of mining companies. What this means is that a mining company that, let's say, decides to change shares of a resident entity in Tanzania between another entities within the group, then that transfer shares will be exempted. As of today, if a company within the country, specifically in a mining company and in all the other industries, what we see is that even if it's a direct change of shares between the same group without an ultimate change in shareholding, the tax authority has been imposing capital gains tax on that transaction. Whilst now we have seen that the change has been introduced for mining companies, probably we see there is also room in terms of that change be spilling over to other industries. We do understand this change is basically looking at currently the government has free carrying interest in mining companies, and we do expect for this restructuring is just for purpose to ensure other investors from the same group do pump in funds to the mining companies. The second change that we have seen is that the minister is proposing to revise the capital gains tax regime on property sales by sellers by reducing the capital gain tax from 10% of the profits and on the disposal of the property to 3% of the sales value or the appraisal value of the property, whichever is higher. Because currently what is happening is that whenever you dispose of a property, tax is computed based on the profits that the seller is going to be collecting from the disposal. But for ease of administration, what the minister is proposing is that we charge 3% on the sales value or appraisal of the property, but this is very specific to sellers of the properties who do not have details of the investment cost. This is to say that if you don't have information in terms of how the cost of the asset that is being disposed was arrived at or was booked at, then you'll be in a position to be, you'll find yourself being taxed based on your revenue or the appraisal value. The other thing that we have seen, which has been sort of challenging from a perspective of companies, is in terms of these indirect disposal of share provisions, specifically Section 56. So what we have seen is that if there is an indirect disposal of shares, that definitely results in an ultimate change of shareholding of the company. The tax authority has been imposing a deemed realization tax at 30%. But this section was used to cater for both direct disposals, that is a resident entity that is being disposed of with shares, or at the same time, if the transfer or the change happens at a group level. So the clarity now that the minister is proposing is that to ensure if there is a direct sale of shares in an entity in Tanzania, then definitely that won't fall under the ambit of Section 56. So we definitely expect the finance bill to give guidelines in terms of that change and the impact that is going to be having in terms of administration. We have also seen the minister proposing to change the income tax regime on individual transporters. And what he's proposing now is that for those individuals that have presumptive income of less than 100 million to be taxed specifically under this provision. You'll recall that back in 2022, when the Section 65T was introduced in the Income Tax Act, it was very specific to be taxed to individuals. But what happened is that when the Finance Act came into force, it was referring back to persons, and the provision now was catering for both individuals and entities. And now the minister is making clarity that this will be very specific to the individual transporters, and the businesses and entities will be continuing to pay taxes the same way the other entities are supposed to be paying. We have also noted that the minister is proposing to introduce an income tax of 10% on carbon credits markets, and the move that the minister is proposing, that this is for widening the tax base and at the same time to ensure equity for payment of taxes. We have also seen the minister proposing exemptions on NHIF investment returns. These are specific to share dividends, interest, and bonds income, treasury bills income that are received by NHIF fund. And the proposal is that to ensure that the fund has enough monetary resources to be able to pay contributions or to pay benefits to its retired members and partners. We also note the other change under the Income Tax Act is that the minister is proposing to scrap off withholding tax obligation on individual tenants who are residing on residences that are non-commercial basis. So what is happening currently is that the change that was introduced back in 2022 introduced a withholding tax obligation to tenants to collect and withhold withholding tax on all rental payments paid to landlords. But now the minister is proposing to ensure that that withholding tax obligation is not put to tenants that are residing on non-commercial buildings. We also noted the minister is proposing again to revive the income tax regime on small-scale miners of 2%. If you recall, this change was proposed back in 2021, but it was never enacted. Then again, it was introduced in 2022, but it was also not enacted. But now we do see now for the third year running, the minister is proposing the same change, but we definitely wait to see whether this time around that change is going to be implemented. We have also noted that the Minister of Finance, together with the TRA, they're proposing to prepare an electronic system to facilitate and expedite the issuance of tax exemption certificates for organizations that such as churches and mosques, just to ensure that these processes take shorter time, and within 14 days, they should be in a position to get the tax exemption certificates. So from those are the main changes that we have seen from an income tax perspective. Next, I'll take you to some of the changes that we have seen being introduced by the minister for VAT. Under the value-added tax, as detailed earlier by Alex, the minister is proposing to increase the VAT registration threshold from 100 million shillings that is currently in force to 200 million shillings. But at the same time, we note that the minister has also said that the amount will be graduating up some point to 500 million shillings to be able to have that as a minimum amount for a person to be VAT registered. This is a good move because it also reduces the compliance costs to small businesses that are also in investment part of the process, and having them to have not this VAT requirement of filing, let's say having compliance audits in relation to VAT reduced on their side. We also see that the minister is proposing to introduce and include in the list of capital goods that qualify for VAT deferment all domestic manufactured capital goods. The move is intended to increase employment. It's intended to make capital goods affordable to all manufacturers. But again, the ministers also intended to cease deferment of capital goods on imported capital goods within the next 3 years. The question now, the ask that we'll be having from the business community is, if you are to cease deferment on importation of capital goods in the next 3 years, will Tanzania be in a position to produce all the capital goods requirement that will be required in the country? The other proposed change by the minister is on zero rating of textile products that are produced on locally produced cotton and at the same time on locally manufactured fertilizer. And the idea here for the minister and the aim for this zero rating of the products is just to ensure that as Tanzanians, we are catered for on the COVID-19 impacts and the global recession that is a result of the Ukraine-Russian war. The next exemption that we have seen the minister proposing is on houses being sold by commercial builders which have a value of less than 50 million. The proposal here is to ensure that these houses become cheaper and available, and in line with the theme of this year's budget to improve the livelihood of local Tanzanians. We are also seeing that the minister is proposing to exempt VAT on the sale and lease of aircraft or parts, and the main aim for this exemption is to improve the aviation industry and at the same time to boost tourism in line with the commendable success the Royal Tour has brought to Tanzania from its effect. We are also seeing that the minister is proposing to exempt from VAT gaming odds and gaming software, so that these two items are also included within the definition of what constitutes to be a gaming supply, which is exempted for purposes of VAT. Also, the minister has proposed to give some exemptions to specific goods with specific HS codes, and of interest here is to look at prefabricated structures and at the same time inputs used to manufacture packaging materials. And also the minister is proposing to amend the VAT exemption schedule to align it with the exemption schedule within the external tariff handbook for 2022. In terms of other tax changes that come through from an excise duty perspective and customs, we have seen some changes that the minister is proposing. And one of the changes is that is proposing to adjust specific excise duty rates of non-petroleum products. And the idea here is that for locally manufactured produced products, the minister made changes last in the year 2016. And for imported products, the last change was done back in 2018. And for that, from 2018 to date, given the COVID-19 pandemic and the challenges that the globe has been facing, there were no changes to the excise duty rates. And currently now the minister is proposing to adjust 10% of specific duty on non-petroleum products and 20% on beer and tobacco. We do expect the minister under the finance bill to issue the specific items and the specific HS codes that are going to be affected with this proposed change. At the same time, to ensure stability in terms of policy from an excise duty perspective, which has been a cry from the business community, the minister is proposing to ensure that there is a stay of 3 years rate from an excise duty perspective, so that the changes don't happen on a yearly basis to take into account the inflation adjustment. The other change that we have noticed is that the minister is proposing to introduce excise duty of 20 shillings per kilogram for domestically manufactured and imported cement. So definitely this will definitely cause the cost of cement to go up, and we definitely want to see how that will impact the construction industry going forward if the proposed measure goes through. Other changes that have been proposed by the minister are tabulated, and you can see the minister is proposing to exempt from excess duty electric non-utility vehicles and CNG vehicles, so that in line with the adaptation and the changing climate theme that we are having in the budget, that we ensure that we are compliant. We're also seeing that the minister is proposing to reduce excess duty on ready-to-drink products, as he had said in his budget, vinywaji vikali, from 4,386 to 2,466, and the aim here is to stimulate and promote locally produced products. And at the same time, the minister is proposing to introduce excess duty of 5% to vehicles with more than 100,000 cc but not exceeding 2,000 cc, and at the same time, with the vehicles with more than 200 cc, a rate of 5% excess duty. And at the same time, you're also seeing that the minister is proposing now to introduce excess duty for vehicles that are aged more than 5 years. As currently speaking, excess duty is only charged to vehicles that are aged more than 10 years. From a custom perspective, we are seeing quite a number of changes that are coming through, but we're just going to summarize a few of those. And what we are saying is that the minister is proposing to charge duty at the rate of 0% on inputs or raw material used to manufacture capital goods equipment, raw materials used to manufacture wire products, and inputs-based oil products used to manufacture lubricants. So the minister is proposing to charge all these at a rate of 0%. Also, other changes that we expect the minister to change is in relation to inputs used to manufacture wiring harness for vehicles and the motorcycles, input used to manufacture radiators, inputs used to manufacture tires at a 0%, but again introducing duty at the rate of 10% on input used to manufacture wire products, needles, springs, rope pins, nails, and electricity cables. So those are the changes that we are seeing happening under customs. But again, to take you into perspective, also look into the changes that are introduced from a tax administration perspective. And from that, what we are seeing is that the minister is proposing to provide a definition of what constitutes to be a primary data saver. Because what has been happening is that the Tax Administration Act has introduced a requirement to ensure that every company has a primary saver sitting in Tanzania. But currently, with this new definition of the term data saver, it can either be physical, it can either be virtual. And the idea is that to ensure the investment costs are reduced and the information accessed by the tax authority is readily available. Again, from a tax administration perspective, the minister is proposing to make changes in terms of penalties that are charged for a person for failure to issue an EFD receipt, and at the same time for a person who has a failure to demand or request a receipt or report a failure for a person to issue a receipt. And what the minister is currently proposing is that to either the person to pay 20% of the tax evaded or 3 million, whichever is higher, is penalty. And given the current approach that we are seeing that the tax authority is doing in most cases reconciliations between financial statements and VAT returns, reconciliation between EFD with VAT returns, EFD with financial statements, definitely we'll see a room for the minister, for the tax authority to be able to implement this proposed change if it does go through. One of the other changes that we have seen from other notable tax laws and other government requirements, we have seen a change being introduced under the Local Government Finance Act. And under the few changes that we have seen, one is that the minister is proposing to give back the mandate to collect revenue on billboards back to the local government authorities from the tax authority, the TRA, who are currently holding that space. But at the same time, the minister is also proposing to reduce the rates of the revenue on the billboards in terms of the fees charged to a number lesser than what has been charged as currently speaking. At the same time, the minister is proposing to integrate property tax and land rents to be paid through one control number. But at the same time, the minister, with consultation from and assistance from the Minister of Land and PureLag, will make an arrangement in terms of how that is going to work. At the same time, we are seeing that the minister is proposing to have a central collection system of service levy from electronic money issuance. But in summary, what we have noted in the Local Government Finance Act, the minister has also talked about advertisements that are done through online system, and they're going to be making a system specific for purposes of collection of that tax in terms of the likes of Instagrams and Facebooks and advertisements that go through that. Another notable change that we have seen is coming through the Roads and Fuel Tolls Act, where the minister is proposing to increase the roads and tolls fuel by 100 shillings for both diesel and petrol. With this expected change, we do expect the price of fuel to go up, likely in the near future. In terms of the Immigration Act, we are seeing that the minister is proposing to issue a resident permits to any investor that buys a house with a capital of not less than 150,000 US dollars. But the question now becomes is that our Land Act restricts foreigners from owning land. It will be interesting to see how this proposed change is going to be implemented. Again, the minister is proposing to abolish the daily levy imposed on each SIM card, and we'll definitely try to see how that will affect, because the intention for that abolishment is that to increase the transaction that people do use through mobile money. Under the Mining Act, the minister is proposing to exempt refinery centers from paying the inspection fee of 1%. And at the same time, we are seeing that under the Foreign Vehicle Transit Charges Act, the minister is proposing to charge same rates that are charged for foreign registered vehicles is charged under East African Communities, SADC and COMESA. But again, the minister has cautioned that in the event the rate charged by Tanzania is less than the rate that is charged by these member states, then definitely the Tanzania will be charging the higher rates for that matter. In terms of the Gaming and the Gaming Act, the minister is proposing to introduce a limitation of not more than 2 table games to 40 machines. And again, the minister is proposing to introduce application fees for slot machines in shops and for slot machines in bar sites for a value of 500 shillings and principal license for 10,000 US dollars. But again, the minister is proposing to introduce a fee of 500,000 shillings and principal license of $5,000 for 40 machines. In another move to ensure consistency and charging the same rate, the minister is proposing to reduce the tax rate from 25% to 18% on gross gaming revenues for 40 machine site operators. So in summary, those are the key changes that we have seen, apart from the one that was initially discussed by Alex in terms of the proposed reduction of skills and development levy from 4% to 3.5%. So we'll definitely have additional changes that are coming through from the blueprint from the government that are definitely affecting so many industries from tourism, construction, infrastructure, insurance, and I will definitely be giving those under our alert. This is just a summary in terms of the specific that we believe were of importance for us to share for now. Back to you, Cecilia.
Thank you very much, Sam, for that analysis of the proposed tax changes. And at this point, I would say that a healthy analysis will be to also look at what is happening to our neighbors, Kenya, Uganda. What are we going on the same route? And for that, we have my good friend Mwariki Sabato, who is a tax manager at KPMG. He has over 9 years experience in delivering tax compliance and advisory services. He has carried out tax compliance, advisory, and planning assignments for major companies operating in diverse sectors in and outside Tanzania. Mwaliki will be taking us through what is happening in the region in terms of the proposed tax changes. Mwaliki, take it away.
Thank you, Ceci, and good evening, everyone. I will just have 2 slides to actually give you a feel of what is happening in the 3 other EAC countries. I know there are more in terms of the EAC countries, but I'll just cover Rwanda, Uganda, and Kenya for the purpose of this presentation. So the idea is to just give you a feel of what is happening, and it's just 2 slides. So then we can leave time for a panel discussion and probably questions and the answer from the experts that we have. Now, from Rwanda, it's becoming the first country across the region to now dig into reducing the corporate income tax rate. Where in Tanzania, you know, we have that reduced rate of around 25, but that is specifically for some specific sectors. But Rwanda is now looking into reducing the 30% to 28%. And the Minister of Finance in Rwanda specifically say they intended to go spontaneously to 20%. So that is really a welcome move, which is likely to increase investments in the country and to also encourage voluntary compliance. On the ESG part, to encourage moving to electric motor vehicles. And you know, Rwanda has been one of the countries in the region that is championing for electric motor vehicles. There is a proposal to zero rate VAT on electric vehicles. Another good news from Rwanda is the government is looking to allowing newly registered companies to claim input tax that they incur during the pre-registration or the pre-operations stage. So the expenses they incur before they are even registered for VAT, now there is a proposal to actually claim those input VAT that they incur. The last one from Rwanda, there are more, but these are just a few to just give us a feel of what is happening across. Is on the authorization for import of services. So that is a big trick, that if you need any services that is not available in Rwanda, then you need authorization from the Minister of Finance. So it is not clear at this stage whether that will cover all the management services, but that seems to be the intention, to capture the importation of services in Rwanda. For Uganda, the key one is the removal of thin capitalization rules for microfinance institutions. So then those institutions will be allowed to claim full interest expense that they incur, the financial cost, the financing cost. So that will be a good move to allow those microfinances to really borrow, and that reduces the tax burden on them. VAT registration for auctioneers. Now, if you sell a property as an auctioneer, that you will be required to register for VAT if that property is taxable, VATable. So that move is intended to increase revenue, but it could be meaning that the auction, the goods now may become expensive. The last one is the expansion of the definition of the term electronic service. I'm sure you are aware that across the region, digital services tax is becoming a hot topic, and Rwanda is not behind, Uganda is not behind on that. They have expanded the definition of electronic services. In essence, they have gone further to say if you're a non-resident in Uganda, you can register and pay taxes in US dollar from wherever you are, not necessarily Uganda shillings. Now, lastly, on Kenya, in Kenya, there's a number of changes there. Some of them you might have heard, they're controversial and bringing public unrest. But here are a few that we have picked for you. The withholding tax requirement in Kenya has always been you pay the tax you withheld on the 20th day of the following month. But from what seems to be very strange, you will now be required to withhold tax and pay within 24 hours to the Revenue Authority. We wait to hear on how that is going to be implemented, but it looks a bit administrative hassle, withholding the tax and make sure you pay within 24 hours. But from the outskirt, you could feel, the government needs money to run business, daily operations. And so that could be the quick win, because otherwise you'll be asking why that law, when in essence, withholding tax is just advance tax towards my final tax. So the answer could be because the government needs money to run the daily operations. For Kenya, they have introduced an exemption for liquefied petroleum gas, but increased the VAT on petroleum products from 8% to 16%. Kenya is one of the countries in the region that have staged rates, different rates for different products. So petroleum products have been charged in the past, the rate for VAT on petroleum products has been 8%. Now they are now increasing it to 16%. But then LPG, which was 8%, and now they're moving it to the exemption. The last one is from Kenya is the introduction of a deposit of 20% of the tax that is in dispute when you are appealing to the tax appeals tribunal. If you compare that to here at home, here you need to pay a tax deposit of 30% when you're actually objecting to the Revenue Authority. There is also another small fee when you are appealing. But in Kenya now, that cost goes at the stage of the tribunal. And the essence is for them is to try as much as possible to, to restrict those unfaithful taxpayers that go to the court just as a delaying tactic. So really putting a commitment fee of around 20% of whatever you're disputing at that stage. So that is what I had, Cecilia, and to the general public, I think Cecilia had asked me to handle this to Jennifer, who is co-hosting the session. So maybe now I will hand over to Jennifer for the panel discussion. Jennifer.
Thank you very much, Mwaliki. So my name is Jennifer Kajuna, a senior manager at KPMG. And at this point, I would really like to put on my word of appreciation to my co-moderator, Cecilia Otaru, for a job well done.
Thank you, Jennifer.
All right. Cecilia, please confirm you can see my video.
Yes, I can see your video.
All right. Yeah. So, and another round of appreciation would go to Professor Semboja for taking us through the economic analysis, and also to Samuel for leading us through the proposed tax changes, Mwaliki for that wonderful presentation on the regional highlights. So at this point, we'll now move on to the panel discussion, and we have with us 4 seasoned experts from diversified sectors within the industry. And as I welcome the panel members, Mwaliki, would you please help to check on the Q&A and also the chat box? I've seen a number of questions that have been posted, so you could probably start responding to those, or we can also use the Q&A session that we'll have at the tail end of our session. So for our panelists today, we have Amit Srivastava. He is the CEO of GA Insurance Tanzania Limited. He's an insurance professional with close to 30 years of experience in non-life insurance industries, and he's worked for in Tanzania and also in India. He is a board member of the Association of Tanzania Insurers, a chairman of the General Insurance Council of ATI, and also the chairman of Tanzania Energy Consortium. We also have in the house Robin Kimambo, also a seasoned certified public accountant and currently the head of finance and operations for Vodacom Tanzania. He has over 10 years of experience in accounting, risk and financial management, and also specializes in the field of telecommunication and logistics. He's conversant with corporate governance matters, and he's worked with a number of board committees throughout his career. We also have Caroline Wambui, a director of finance and support services at Save the Children in Tanzania. She's a certified public accountant and a holder of the Masters in Business Administration in Finance. She has over 14 years of experience in finance and leadership. We also have Peter Nalitolela, a director and head of treasury and financial markets with NBC. He brings in over 16 years of experience in banking, investment management, pension fund management, power, energy, and also academics. Peter is a holder of master's degree in application of modeling, obtained from Trent University in Canada, and also a Bachelor of Science degree majoring in mathematics with a minor in computer science, also from Trent University. So like I mentioned, we have seasoned experts from diversified sectors. Maybe to kickstart our discussion, we have a theme of accelerating economic growth, withstanding the facing climate changes effects, and also enhancing production policies for improved livelihood. And so maybe looking at the budget that has been put ahead of us and looking at it in totality, how does that resonate with the theme? And maybe for good order, we can start with Caroline and then we'll get to hear from Robin. Over to you, Caroline.
Thank you very much, Katrina, for that introduction. And thank you to Professor Semboja, who's really provoked and stimulated some thoughts on the notes that I had taken so far. So when I look at the sustainable development, as well as the way the budget has been structured, I see that it has prioritized productive sectors in research, as well as infrastructure investment, offering tax reforms should see operation costs going down. So as a development professional, that is good news for me because I see more money in households, but also more money for children, going back to my background. Secondly, a call for government institutions to be a facilitator rather than a controlling arm. Their approach in following up of tax disputes as well as tax legislation. I think it is a clear move that the Tanzanian government is ready to do business. It's a positive impact in terms of the communication that's going out there in the cost of doing business, but also the ease of doing business. Number three, the call for private sector to take its center stage in contributing to the economy of Tanzania. While Professor Semboja was speaking, I was thinking about what he talked about the private sector and the perception of the private sector in Tanzania by the public. Perhaps you could have seen more deliberate effort to try and change that perception, but also encourage private sector contribution to boldly take its stage economy. I see encouragement of value addition in several sectors, i.e. Mining, farming, manufacturing industry, but also encouraging the local businesses to access international markets. So we are looking forward to see what kind of reforms and strategies will be put in place to ensure that Tanzanian local producers are accessing international markets. Although not to a large extent, I see mention a direction of revenue to mitigate climate risk. While it's still early days to measure the impact of that revenue in terms of dollar value, but also the impact that it makes in terms of Tanzanian contribution to global climate change mitigation. But it's still encouraging news. I thought that more needs to be done because it has devastating effects in the lives of the citizens, but also the children. Last but not least, when Professor was speaking, I was thinking about comment on manufacturing, which is a priority for the government. And our manufacturing methodology is described as archaic back in 1990, our methodology. So I wonder if we could have invested more in innovation, but also revolutionizing the manufacturing, ways, not only in terms of encouraging young people to take up STEM, engineering and math, but also encouraging foreign direct in Tanzania to revolutionize the manufacturing methodology. Over.
Yeah, thank you very much, Caroline. And I really liked the fact that you mentioned that the government is more of a facilitator, meaning that the ball is on our court to ensure that we bank on the fiscal policies that have been put in place so that they can act on our favor. Robin, what's your take on this?
Thanks, Jennifer. Good afternoon, everybody, and thank you for having me today. I'd like to send my appreciation to Professor Samboja and Alex and Samo as well for an insightful session so far. So, well, in my view, it's always riveting times, indeed, whenever the national budget is being read out, and this one was not different. Of course, having followed the Honorable Minister's speech keenly, you'll notice that the key theme was around championing private sector-led inclusive growth, which all my previous speakers have been talking about, which again, you cannot have sustainable growth without the inclusion of the private sector. But importantly, you need to have enabling policies to be able to support that. Well, you could also see that he further emphasized the move from being some sort of controlling to more of supportive and enabling in terms of helping the private sector, while also he acknowledged the immense contribution of the private sector in terms of creating employment opportunities, poverty eradication, and economic growth. In that instance, he also talked about certain initiatives that were taken by the government in terms of the enactment of the Tanzania Investment Act, a number of legislative amendments, which we continue to see even in this budget, some of which are positive, some of which probably pose question marks, which I'll get to in a moment. But also he really stressed the importance of public-private partnerships, which we have an act that was enacted, I think, around 13th of June. That is also a very welcome move, especially if the private sector is doing a lot in that space. So what we'll continue to see, I do believe, is that, as the professor mentioned, is that the government definitely has a priority to make sure that all the flagship projects are completed, because essentially it's sunk cost already. You need to make sure that you realize the completion of these strategic projects and to make sure that the economy realizes the large multiplier effects that we're expecting. And just to add on to that, what I noticed is that the priority areas for the government have been around building and benefiting from the digital economy, which coincidentally my sector is heavily involved in. What we're advocating a lot for digital and financial inclusion, and it was pleasing to see that in terms of enhancing the competitive and inclusive economy of our country, a focal point has been building that digital economy, and you can see that especially around some of the measures taken in the budget. But of course, construction, as the professor alluded to, has good sustained double-digit growth, just around 10% or slightly over that. And again, the focus will still continue to be there in terms of building the infrastructure to enable efficient movement of produce and the like. But again, another interesting thing that they'll be focused on is around sort of improving the contribution of the agricultural sector in terms of GDP specific. But also what I noted was that he also focused on the overall value chain improvement within the agriculture, which again, coincidentally, Vodacom specifically is in, and we're heavily involved with our Mkulima platform offering. So what we're typically doing is essentially trying to digitize the entire value chain in the agriculture, from helping the farmer to be able to predict, to be able to see weather forecast, to be able to see when is the right time to grow, to be able to take soil measurements, to be able to increase the yield, but also in partnership with the government to be able to create a database of the farmers, what they're producing, what is the expected yield and stuff like that. So with that, essentially, they also get access to inputs, which the government coincidentally subsidizes. And you notice in this budget as well, the government did mention that they're offering a subsidy to reduce the cost by about 50%, from 140,000 for a 50 kilogram bag of fertilizer to about 50,000, 70,000. Now, all this was done manually in the past. Now we have, through Mkulima, we have about 3.5 million farmers registered on our platform. Can you imagine? We just did that in about close to 9 months period. So again, here's an area, a strategic area where we can partner with the government to make sure that we realize that vision in terms of trying to add the overall, basically digitize the value chain in agriculture and being able to realize that the benefits for the Mkulima, who's the ordinary mwananchi, but also throughout the value chain, everybody who's involved there. But also it was interesting to see that, which is, again, it's not a surprise, the focus on food security and basically making sure that we increase output and also building the infrastructure to maximize, to ensure we have efficient storage of the produce. In terms of budget allocation, of course, the agricultural sector still has about 7%, I think, allocation of the budget. But what was interesting to see is that out of all the sort of allocations, the agricultural sector had a significant increase of 20.5%, which again signals the government's intent to focus in this area. The other priority area was around investment and trade promotion. So essentially, it's creating a favorable business environment in terms of processes, efficiency of systems, laws and regulations, which again we see some of the in terms of the proposals that have been passed. It's mainly targeted towards that. One other thing that essentially it's that I was really happy to hear is about gold reserves initiative. When we're facing this currency, hard currency shortage in the country, I was not shocked. I actually saw it in some of the news readings that Tanzania doesn't have actually any gold reserves. That's actually shocking for a country that's one of the biggest gold producers in Africa. So essentially, it was really good for the government to take a determined effort. And this follows an initiative that we had a discussion with the Bank of Tanzania together with other stakeholders in the financial sector and the Tanzania Private Sector Foundation. And it was good to see the government take it on board and to make sure to realize that initiative. Now, briefly, I would just like to zoom into our sector And just to give you a flavor of how we have been doing, and then I'll just move on to the fiscal matters concerned. So our sector has been seeing encouraging recent growth, with 13.7% growth in the quarter to September 2022, which is the first double-digit growth that we've seen over the last 15 months. So the sector has been facing a number of headwinds. It was nice to see that nice and encouraging to see that we're back to 13.7% growth in the sector. We've seen growth in annual subscriber numbers by 30.9% as of December 2022 for data. And in mobile money, we have seen a 24.1% growth as well in terms of customers. So that's all encouraging to see. But also, if I look at Vodacom Tanzania PLC, we are a listed entity. We have reported a 10.2% service revenue growth for the year. And for me, this is quite good. Again, we're going back to the double-digit growth, which we have not had in about 2 or 3 years. And this is a good signal. But importantly, we've seen good growth coming from mobile data revenue as well as M-Pesa revenue, but a decline and pressure on the voice revenue side. Now, if you look at the 5-year development plan phase 3 for the sector, which goes up to 2025, 2026, we have a target in terms of GDP contribution of 3% for the sector, and also target to make sure that we have internet penetration of 80% and also broadband communication coverage reaching 80%. I'll get to in a moment how we're able to, based on the fiscal policies that have been passed, I'll be able to show how that we're supporting that. So again, for the sector, as I mentioned, resolution of the fiscal challenges that we've been facing would really help the sector in terms of promoting growth and also contribution in terms of GDP. In terms of priority, we as a sector, we had put forward a number of proposals. I'll just focus on the top ones. And the first one is basically the removal of mobile money levy to the Mwananchi. So if you look at our transactions, about 80% of the transactions happen equal or below the line of 50,000 shillings going down. So this technically mobile money is actually used by the ordinary Mwananchi for a number of transactions, sending and cashing out. Now, it was nice to see, it was pleasing to see that the government abolished the levy on transfers. Of course, this follows a number of engagements with the government at various levels, which was good, again, to see that it follows a number of reductions that they've done, about 3 of them across the year, and it culminating in the removal of the levy on transfers. But unfortunately, we also saw that on the cash out side, on the transfers, we've seen an increase in the levies. Now, it will be interesting to see how the consumers react in terms of levy increase on the cash out, withdrawals. So from a government perspective, I think I understand where they're coming from. They're trying to build a cashless economy, meaning blocking money removing from the ecosystem, making it excessively expensive so that people can use mobile money to send money and actually make payments and the like. But it's also very important to ensure that we have the infrastructures in place to enable that, meaning we have the merchants onboarded and all the enabling factors within the ecosystem to be able to enable that. And so it will be interesting to see that levy increase on the withdrawals, how the consumers would react. If you look at the trends of the values and volumes on withdrawals, it has been on a steady decline ever since the levies was introduced. Even though they reduced the levies, it never managed to make a recovery. On the airtime levy side, it was pleasing again to see abolishment of that. It reduces the overall affordability of the services, and it's much needed in terms of a sector that is heavily taxed. Moving on to the reduction of right-of-way charges for fiber optic cable. So just to sort of remove, to clarify, the right-of-way charges simply entails, these are fees that we pay to TANROADS for any pipe that goes along the road reserve. So essentially, the telecommunications or ICT sector was paying $1,000 per kilometer for fiber optic cable, which is essentially just like your normal wire, TV wire at home. $1,000 per kilometer. The industry has close to 3,000 kilometers. That's $3 million annual cost just for that fiber. While you could see the certain, if you look at sewage pipes, etc., all those were paying less than $100. So you could see that disparity there. But it was very pleasing to see the government reducing this from $1,000 to $100, which was again very good to see. But importantly, this would definitely enable the digital economy that they're trying to build. Because remember, fiber optic cable enables the efficient and reliable transmission of data. And it's actually the backbone of efficient data transmission. And this will definitely help in terms of realizing the broadband coverage and internet usage ambitions of the government. So that's a good move by the government. The other small changes that have been done in terms of reduction of advertisement fees, which again, for us, it is a significant cost if you look at the telecommunications and mobile money side. But here it was good to see a reduction, but we have a concern in terms of moving the mandate of collection to local government authorities. Now, the question here is, I think probably we need clarification in terms of the collection. Is it through a one central collection point, just like in terms of city service levy? Or is it going to be a massive administrative burden for the telcos and mobile money? Because if we now need to verify, maintain active relationship and make settlements to over 120 municipalities and local governments, this is going to be a massive administrative burden. So these are areas that we're seeking clarification on, and hopefully it will be implemented just like the service levy.
Thank you, Robin. That was very packed. Yeah, I was also looking at our time. Thank you, Robin. I think you've had tremendous contributions. And maybe because of the time that we have, we could probably also get to listen to the other panel members. And at this point, maybe I can hand it over to Amit. And for Amit, maybe if you look at the various fiscal incentives that have been proposed in the budget, and I know Caroline, Robin have covered some of those. So what other reforms would you have expected to see from the budget that have not yet been covered, Amit?
Yeah, thank you, Jennifer. Thank you for this opportunity. And thanks to all the previous speakers for giving an insight on their respective parts, as well as Robin, who was actually very well highlighting the specific advantages to the industry, communications and data transmissions. See, the things, unfortunately, or I would say, unfortunately, the insurance sector has this time been totally ignored under the budget. There is not even a single mention about the insurance sector. And we had, as a body, on an overall basis, we did have an expectation that there may be possibly a tax rate, corporate tax rate review, which could have been beneficial for the industries to bring about the essence of what we say, that to encourage the manufacturing and other sectors, to cost of doing business. The cost of doing business is one of the highest factors. And we did see there have been small moves and small measures in their own way by reducing the SDL. And overall, an encouraging sentiment where the minister has duly highlighted the key role played by the private sector, that they should be facilitated. They've been contributing to the industry. So we should have a facilitating and an encouraging environment. The other factor which we had been actually looking at was a reduction in VAT on insurance premiums per se, because that's one industry where, again, insurance is one of the largest taxpayers in the country. And we were looking forward to some rationalization of the VAT on insurance premiums. If just for the benefit other listeners on the panel, the insurance premiums are subject to 18% VAT, and it was all brought in as a whammy, which we firmly believe to support the insurance sector, maybe the rationalization of the VAT chargeable on premiums would help. Then one of the other major factors was the whole of the last year, we as industry and the government was talking about introducing the socio-economic reform, effectively bringing about the universal health scheme for fundamentally providing insurance coverages and health services to the underprivileged sections. But the budget, incidentally, we find is totally silent about funding of this scheme, and which would have been a good measure. We did suggest to the government that it should be done on a pilot level rather than going on universal word. You could have a universal word, but please try to pick up a segment of the segment which needed that most desperately, the underprivileged sections of the society. So, but we are finding that the budget is totally silent on the aspect for this. The second major initiative is the insurance industry per se was pushing was for agricultural insurance, One of the major steps which government did was giving a relief on the VAT on agricultural insurance. But the agricultural insurance throughout the globe survives mostly on subsidies by the government. Left to themselves, the agrarian population would not possibly look into buying an insurance, but we need to initiate them into this to encourage them to come into this environment. There should be a subsidy, but there is no mention of subsidy in the budget at all. And as it is, if you say the agriculture budget is only increased by a flat 15 billion from the previous figure of 956 billion to 970 some odd. So it's not really a great contribution. And obviously, I believe that there is no provision made, which is a bit of a setback, because as an industry, we are working very aggressively to start off the insurance consortium for agriculture. Then one of the other factors which we expected from TRA on the tax perspective was a one-time waiver, which akin to what possibly Kenya has already done, a one-time waiver and a closure of the penalty issues on industry, because that has been a pain point for especially the insurance industry for a long time. The matters which have been lying with the appellate bodies and they have still not been sorted out. So if those kind of relaxations one time, it encourages the business community and investors to come in and with all their energy and you can say enthusiasm, because all these factors we believe would have positive impact on the sectors, as well as bring about, encourage more investors into various business segments, including the manufacturing. I think that's all from my side. Thank you very much.
Thank you very much, Amit. That was quite insightful, precise, and to the point. We've heard your pain points, especially on the VAT, on the insurance premiums. This is something that, yes, it might have been taken into the budget, but we've not yet seen it come through. And so maybe, Peter, given the fact that you are in the banking sector, and we've currently seen a dip in the forex reserves, which has affected a number of African countries, and Tanzania is not excluded. So do you think the budget has set some sort of a foundation to address the challenges that we are seeing, both from a short-term and long-term perspective?
Thanks, Jennifer, and thanks to the previous speakers. Good afternoon, everyone. So in terms of the budgets and how it addresses the FX challenges, I do believe that there is quite a positive foundation that has been laid out. And specifically, just to share with our members that are on the call, the way the FX market works is that you have to be exporting to receive foreign currency, and whenever you're importing, you have to pay out. And for us to be in a safe situation, we have to make sure that we export more than we import on one part. And on that angle, I believe the budget has laid a positive foundation, like I said, because number one, there is quite a bit of a focus in terms of investment in agriculture, for example. I would have liked to see a slightly bigger increase, but that said, I still recognize that the government last year pushed the allocation in the agricultural sector quite a bit, and this year there's been a bit of an increase, which helps because some of our biggest foreign currency earners is agricultural commodity that we export as a country. But also staying on the agri agenda, another positive impact that the government has done in terms of the budget presentation is the fact that they're providing an incentive in terms of locally manufactured fertilizer. What this does, number one, it reduces the cost on the agricultural inputs for the farmers, which means that we can be more competitive in our agricultural exports. But two, it reduces the demand for us to import fertilizer if we encourage locally manufactured fertilizer, which means that by reducing the import bill from fertilizer, you are reducing the gap, the FX gap that we create as a country between our exports and imports. Number two, in terms of the activities that we're doing in the mining sector, for example. And on this, I'll also touch a bit on another question that you asked earlier on, which was overall, does the budget address some of the key issues, including climate change? There's quite a bit of a focus in terms of investment in, for example, moving beyond gold and looking at other mining products like nickel and graphite, which are key in terms of, number one, addressing the climate challenges that we're facing as a globe. But number two, it puts more emphasis in terms of how much more exports can we generate and moving beyond relying on things like gold, cashew, coffee, etc. But number three, the investment in infrastructure and in transportation also does support the growth in tourism sector, because you cannot grow your tourism sector if you don't have a well-functioning transportation sector. And in that angle, the investment that the government has set out in the budget to address the transportation and infrastructure sector helps grow our tourism industry, which in turn helps us grow the FX receipts that we get as a country. But overall, there is encouragement in terms of, for example, the incentives in terms of a transfer of shares that Alex and Professor spoke to earlier, which means that you attract more foreign investment coming in. You encourage investors to put more money into the country. And that in turn helps us with increasing our FX reserves. But additionally, also looking at other areas, for example, if you look at, there is an introduction to provide residence permits, Class B residence permits for investors who buy property in Tanzania that costs $150,000 or more. That means that you're attracting more foreign direct investments into the economy. I'm cognizant that we are a bit short on time, so I'll try to be brief and end there. But in summary, I believe that the foundation has been laid out. One big ask for me from the government would be the fast tracking of the blueprint, because a lot of what we are trying to do as a country to attract investment is reliant on the blueprint, and the blueprint is not out yet. The more clarity we have in terms of regulations, laws, etc., the more investment you can invite into the country. And some of speakers like Ahmet and Robin spoke specifically about their specific industries. And one key ask would be, we should have a lot more clarity, a lot more incentivization into different sectors so that we allow more investors to come in rather than trying to use a lot of taxation and regulations. For me, Jennifer, that's all. I think we're just at 5 p.m. right now. So I'll pass the mic back to you. Thank you.
Thank you very much, Peter. I know we are really running behind time. It's a lovely discussion, and it really requires a lot of time in order for us to, sort of deep dive into the budget and get to have better insights. But thank you very much for what you've put forward. You've covered the foreign exchange earners as agriculture, and you've put forward the measures that have been taken from an agricultural perspective. If you look at the exemptions that have been put on the locally manufactured fertilizers, for example, you've touched on mining, you've also touched on tourism and the exemptions that we've seen from a transportation perspective. So I think that sort of brings things together into perspective. Sabato, I don't know if you've been able to go through the Q&A so that we can respond to the questions in the chat before we welcome Alex to give us some closing remarks.
Yeah.
Maliki?
Yes, we have been responding to the questions as and when they come. So I believe we have responded to all the questions, unless you want to give an opportunity to anyone who has a burning issue.
Yes, maybe from the members of the floor, is there anyone who would like to would like us to pass down the mic so that they could either comment or ask a burning question. I know we're already 2 hours past the top of the hour. Okay, so I'm not seeing any hands yet. Okay. All right, so I'm not seeing any hands, and I believe that the questions in the Q&A and the chat box have been responded. And maybe at this point, okay, so there's a hand from Peter.
So there was a question for Professor Semboja that I think hasn't been addressed yet. It was in terms of the comment he made around our investment policy being old. Maybe the professor can add specifically what he was thinking about. But maybe just my 2 cents on that is, while we're doing a lot of good work in terms of attracting investors, I think there is a need, number one, like I shared earlier, to have our policies and our regulations be more investor friendly, which is something that is still a journey. But I believe that we, like I shared earlier, we need to move to a point whereby we don't always just look at necessarily collecting taxes or trying to make, apologies, but for lack of better word, things more difficult for the business environment, but try to incentivize investment to grow so that we attract, we create more employment opportunities. For example, we get into a situation whereby eventually, if you have a bigger tax base because you have more people employed, then you reduce the burden and you can get to a point whereby, for example, you start reducing the corporate tax rates the way Rwanda is going. And because you can create, so you can collect a lot more from pay as you earn. But maybe if the professor has specifically comments to add in terms of what he meant when he made his comment.
Yes, Professor.
Can I continue? Yes. One is a fact that we have our policies, industrial policy and investment policies of 1990s. It's 1996. So they're too old, and we have not yet revised and come up with the modern policies which will cater for the current global fourth industrial revolution. So that's number one. Number two, I mean, when we talk about investment, I mean, we have to focus on both foreign and domestic investors. Now, of course, I mean, for sustainable development, you need a situation where when the foreign investors are coming, already you have in place the domestic investors. Countries like Kenya, this is a good example where you see you have real joint venture firms where you have the indigenous Kenyans and foreign investors. They are one and the same in the investments. Now, I mean, for Tanzania, given the background which we have and given the political environment which we have, really we have problems where we lack ownership of the indigenous Tanzanians. I mean, we don't have indigenous population that Tanzanians who are owning or managing these operating these industries. So you have the Tanzanians are in the small, medium scale firms. So I think the policies should be there to support the transformation of the informal and the formal small scale to transform them to medium and large scale. In particular, you're talking about the mining. Okay, so my focus is the mining, is where we see the possibilities, and we have seen now the government is trying very much to support that one. So that one can be done not only in the mining, but in all other sectors. Okay, I think that's number one. But another point which I wanted to a little bit look at it, it's about this question where you have you have at the moment, if you look at the structure of the government of the Tanzanian taxation system, 20% is coming from the domestic, 40% is coming from the um, large taxpayers, and 40% is coming from the exports, the import duties. Now, I mean, I would say that this is a picture which has been there for the last 10, about 20 years. And I don't see any possibility of changing that one without necessarily changing the policy environment. So, I mean, I'm searching for the possibilities of the country to see that instead of embarking into this kind of short-term kind of the measures to address these long-term problems, that is not sustainable and it's not acceptable. I think what I see at the first stage is to understand what is our vision. Okay, clearly, if the vision is known that this country is a bigger country with a bigger population, and we have adequate resources, not in terms of only natural mineral, but also the land, the forest, the animals, and whatever you have, it is time to think about how these resources should be developed to suit the current thinking of many Tanzanians. Because I mean, I know when people say we have problems of the currency, I mean, foreign currency at the moment. I mean, it is people, they don't understand, because what is happening, which is it's a fact, is that we know we have gold, and 70% is coming from this export is from gold. But nevertheless, the Tanzanians have the data. We have the data about the gold, but the gold is not ours. So we don't have resources. And I know people, they have heard about these government efforts of creating some facilities within the Bank of Tanzania, whereby probably they can participate in purchasing the gold and preserve it in our coffers. But this is not the first time. We did that one, let's say 20 or 30 years ago. We failed. So we have to know exactly why we failed in the beginning, and then we have to know if we want to do it based on the current legislations, how that one is done in other countries and how that one can be done in our country. It is not a mission impossible. Rather than is to understand that you can't do anything given the vision and mission if you don't have a system. When I mean a system, I mean we need to have policies, we need to have laws and regulations, and we have to have institutions which are here to provide the basis and the links between the public sector and the private sector for sustainable development.
Thank you very much, Professor. Maybe before I hand over the mic to Alex for closing remark, maybe you can just use 30 seconds, Professor Semboja. The budget that we've seen has around 70% being mobilized domestically. Maybe as your parting remarks, what does this mean for the country from an economic perspective? Just in less than a minute.
One, the data is not correct. I mean, it's 60%. That's number one. And number two, all it means that now if we can, what they are doing is to depend very much on the domestic revenue sources. And domestic here include many other aspects, which also you have to go through the different systems, including taxation and other things. Because I know my people, they are not very much aware already to be mobilized to collect the taxes for their own development. So it is a process, and we have to educate and make sure that really there is a consistency between what the people are thinking in terms of their own development and what the government wants to do for the people for their development.
All right. Thank you very much. It was an insightful session, and I really enjoyed being part of it. And I believe all the participants have as well enjoyed all the discussions. Apologies for the delay, but I think it was worth the time that we've spent. At this point, I would like to welcome Alex Njombe for closing remarks, and then we will be ending our today's session.
Thank you very much, Jennifer, for the chance to close. And really just to take this opportunity to thank everybody who participated in this budget briefing session that we have had. In the discussions that have been had today, I think I really thoroughly enjoyed the discussions. And really just was an opportunity to just share from our perspective what we are seeing from the budget. At one point in time, we had over 215 participants in the call or webinar today, which I think is a commendable number. We really look forward to seeing you as we proceed engaging with you in the future as well in these sessions. Really just to also thank the panelists for spending their time, Peter, Carol, Caroline, Amit and Rubin, and sharing the insights that you are seeing from your industry and some of the proposals coming through and what you would have wished to see coming through. We all have our wish list, as I mentioned when I did my opening remarks, but it's the order of prioritization, and depending on the data that is available, that then and where we want to go as a country, we then have to respect the budget proposals that are coming through. I think for me, it's really critical that we are given this opportunity as members of the business community to kind of air our view and to make sure that we are able to come back with these proposals in the future that can help shape the budgets for the future. Really liked, Professor, the discussion you put across. I think it was really pertinent in terms of the economic data. And key question that you have left in my mind is that as much as stable economic development that we are seeing for the country, which is supported by the data and the growth rate and inflation rates and the consistency in that data, I think the question you raised is the question of sustainability of that. And I would add also whether that is inclusive enough at this point in time, and what do we need to do as a country to make sure that is inclusive. But I welcome the move from the government. I don't want to repeat the details that have been said. Just also thank the Secretariat, some moderators, Jennifer, Ceci, Sabato, and the team from tax side of things. I know over the course of yesterday, you probably didn't have time to sleep, but spending time putting it together, I think, which has been very successful, is commendable. So thank you from KPMG. Feel free to engage with us. We continue to engage through various mechanisms. You can reach out to any of the teams that we've seen in this platform. Feel free to also read various alerts that we normally issue from time to time with some of the changes in practical application of some of these proposals. We look forward to continue engaging with you, and have a blessed day, and enjoy the rest of the evening today. Thank you. And bye now.